The NGX All-Share Index experienced loss of 3.57 trillion in market value in April, leaving the index up by 31.36% year-to-date. The month witnessed intensified sell-offs, with the index closing at 98,225.63 points, below the 100,000-point threshold. The banking all-share index was the worst performer, losing an estimated 25% in April. Analysts attribute the downturn to profit-taking, the interest rate hike, and a shift towards fixed income investments for higher returns. Well, joining me for more on this is Olaide Banu, equity research analyst at Adino Capital Limited. Thank you so much, Olaide, for joining me today.
Good morning. Thank you for having me.
Absolutely. Well, stock market investors lost 3.57 trillion naira in April. How are they reacting to this?
Last month, in the month of April, the equity market declined significantly, losing the 3.57 trillion naira. And this was largely impacted by the numerous numerous that the CBN issued to the market that last month. This include the significant increase, tightening of the monetary policy rate. Notably, we see that the fixed income rate increased significantly. For the 1 month tenor of Treasury bill, traded around 13% to 18% that last month. So this return for investors seems to be impressive from the fixed income market. So that's why the investors move from the equity market to the fixed income market. And also, if you look at the dividend, because this period, this is the dividend era. The dividend declared by those majority of the companies, especially by the banking stocks, were very low in terms of the dividend yield. They are very low compared to their prices, and also compared with what the fixed income rate was doing. So those return push investors from the equity market and to the fixed income market, and we see that this decline happened in all the major market sector, largely driven by largely impacted on the banking stocks, the insurance stocks, going to the consumer goods, the industrial goods, and the oil and gas sector. So it was generally, and it's a bad omen for the market to say, okay, yes, the market declined, but however, this is a very good notification to some investors to say they are coming at a lower price, buying at lower price, and able to sell at higher price when the market rebounds.
All right, I like what you just said now, talking about, for some persons, it's an opportunity for them to come in. But do you think retaining one's investments in the NGX, at this point in time is actually a wise thing to do while watching the trend?
It's about the risk appetite of individual investors. So if you are looking at 1 year, 2 years investment, you can say, okay, this is very good for you to come in. But if you are looking at a very short period, like a month or so, you may want to be very cautious about what you are trading and what's the type of stock you are buying into. So by and large, I still believe the price of those stocks, especially the banking stocks, in April, the banking stock declined by about 24.8%, and that was significant decline. So this poses an opportunity for investors to come into that particular sector and another sectors at large.
All right, still talking about the banking sector, I like that you've started the conversation around how it lost about 25% during that particular month. Now, looking at recapitalization, what impact is that even going to have on those stocks? Mr. Bano, if you can hear me, kindly confirm.
Yeah, I can hear you clearly now.
Oh, you can hear me now. All right. So I was asking you, talking about the banking stock, we saw that they took a hit during this past month that we're reviewing at this point in time. I'm saying by the time the recapitalization plans begin to unfold and all of that, when the banks start this recapitalization process, how is that going to impact the stock market, especially the stocks?
we see that from the circular the CBN released based on this reverse recapitalization process was that the bank should not include their retained earnings into it, and it should be strictly the share capital and the share premium. We see that majority of the bank have begun to sit around what the amount they are going to raise in the market, and it's about the right issue. So I still believe that the price may actually go before the banks conclude on the volume and then the price at which the stocks will be. I mean, the right issue will be issued to the market. The investors may be able to look at what the current price it is now and the price at which the banks is going to raise new capital. So between that period, there will be a kind of positive momentum. May not be significant, but positive momentum around the banking stock before you can say, okay, yes, this is what the banks able to look at. However, I think that around last week, the banks had discussion with the CBN and is talking around if they can actually include the retained earnings in the new capital and the reverse capital requirements. So I still believe between now and then, the price will still fluctuate at the current price and also at the higher price as much as possible.
All right, so looking at all of this now, I understand the losses were anticipated, but don't you think this decline that we saw across board actually beats imagination? And I know we've talked about what to attribute all of this to, but let me get your reaction to the results released so far. Do you think that they offer any optimism? I mean, the Q1 results that we have seen so far, any optimism?
Majority of the results we've seen in Q1 so far, especially for the banking stock. Last week, we saw the likes of the Access Bank recording significant increase in their net profits. So this was largely driven by the current exchange rate, the revaluation of the FX reserve they are having. So this is still part of what we are saying to say, okay, the company are doing fundamentally okay in terms of the numbers, but is it what the CBN actually looking at to say they can recapitalize? I mean, they can increase they can include the retained earning into the recapitalization value they are looking at. So I still believe the banking stocks as the fundamentals and begin to look at which bank can consume the other bank in terms of the acquisition and also the merger within the process of recapitalization. It's obvious that some banks may go, some may acquire the other ones, may merge with other ones, so to say. And within that process, we're able to look at which bank is what's going to be the price of the one that is being merged with the other one.
So if I get it correctly, you're saying that, investors should adopt a sort of wait-and-see approach to the recapitalization on the rights issues to know what these banks will be saying, because more information definitely will be revealed to the market in the coming days.
Exactly.
All right, so away from the banking stocks, generally speaking now, let's look at, the equities market. Apart from the banking stocks, what other sectors do you think, investors should also watch?
They are looking at the telecom sector and also the consumer goods sector. It's obvious that the consumer goods sector were largely impacted by this FX revaluation, and they are largely negatively impacted. Recent years, we've seen that when this happens, the consumer goods sector largely take the hit of that revaluation, and they've always been bouncing back. So this will definitely happen to them, and by the time we begin to see in the next 12 to 24 months, probably the next 1 or 2 years, the consumer goods, if the exchange rate stabilizes, the consumer goods sector will rebound in terms of their financials and able to say they are having dividend earnings. So investors taking the advantage of the current price, we definitely be happy as at that time, so to say.
But if you were to judge, what do you think the elastic limit for this consumer goods sector will be? Because you're talking about, maybe in the next few months, things should stabilize. But if things do not stabilize, for how long can they continue before they probably get to that point where, they reach the elastic limit?
As I said, it's about the stability of the exchange rate to say if the exchange rate stabilizes at this current rate
Yeah,
in the next
I understand
to
what
the
you said,
next
but
few
I'm
months.
saying, I understand what you said. I mean, I got that correctly, but I'm saying that if we do not see stability, for how long can these companies cope before it becomes very difficult, really, or before things get out of
Uh,
hand?
Majority of these consumer goods have FX obligations to their majority to their parent holdings. So what we can see is what is likely to happen and to be the advantage of those companies is that the debt obligations should be converted to equity, and that's when we begin to see positive shareholders fund in that regards. And to that, we may begin to the companies may start breaking even, looking at that action to be taken. And also, as you mentioned, the elastic limit, if continued this way, if nothing is done, and the exchange rate is not stabilized, it continue to fluctuate the way it is, and definitely for a long time, investors will definitely dump the consumer goods further.
And that doesn't look good. I mean, that's what I think anyway.
At all.
All right. Now, do you think we should actually be bothered about this? I mean, what's happening in the equities market? Because at the end of the day, we can explain it by saying people are just probably reshuffling their portfolios and taking positions in instruments with better yield. So do you think we should be bothered about the downturn, the bearish sentiment that seems to have engulfed the equities market?
No, because this current downturn, as I said earlier, is provide opportunity to investors to say they are coming into the market. When the year started around January and February, the market was very bullish, and investors are taking about they are taking little of their profits, and it's expected that the market will decline, and that is what just happened.
But you know what? This decline is taking too long, and there are other, fundamentals that sort of support the decline, and we're still waiting for that catalyst that will spur some, bullish sentiment in the market.
Yeah, the catalyst will definitely come. It may not be currently, it may not be this week, but it definitely come. And it's just for the investor to be very cautious about their trading. If one wants to invest into the market now, is to do a kind of strategic investment. Probably if you have 100% of your money to put into the market, you can start breaking it about 25% of investment to a particular company today, so to say, for example. Then probably after a while, if the price decline further, then you can bring just a bit of investment within that process. So by the time the market rebounds, the investor will definitely smile to the bank.
Well, there is no doubt that the rate cuts by the MPC dealt a heavy blow to the market. You also talked about that. Now, the MPC doesn't seem to be retreating anytime soon, or so it seems. What are your thoughts on a further hike? I mean, if by the time they meet in May, they decide to, hike the interest rate, what do you think will happen? Or what are your thoughts about that generally? Do you support a hike? Do you think it is good for the economy?
The hike is good for the economy. We saw the impact of the hike in terms of the exchange rate as well, and in terms of other asset classes. I still believe the interest rate may not be, the further tightening may not be as significant as it has been in the last two meetings of the MPC. So that's going to have impact on the market. And as I said, the tightening may not be significant, and the impact as well may not be significant into the equity markets.
That's quite optimistic, to say the least. So when should we expect, some form of stability or even higher yields in the equities market? I mean, I want you to be sort of specific. I'm not saying you're looking into a crystal ball, but I just hope you would be able to offer investors, some form of advice, about how they can position themselves for that time.
As I said earlier, the investors can begin a bit trading in terms of buying little by little into their choosing stocks in the market.
Glad to know you're still with us. Standard Chartered Research Head Razia Khan underscored South Africa's institutional strengths, urging a focus on growth acceleration. Despite challenges like frequent power cuts and crime, PwC's Private Business Attractiveness Index indicates rising appeal for private businesses in South Africa. Ranked 23rd out of 33 countries, it had performed Kenya and Nigeria. However, without a growth impetus, its economy is forecasted to lag behind peers like Nigeria and Egypt. Professor Waldo Krugel, economist, Northwest University, joins me for this. Thank you, Professor, for joining me today.
Oh, thank you for the opportunity.
All right. So what do you make of the statement by Razia Khan to investors? Do you share the same sentiment with him?
I agree with him. I think that even though South Africa has been struggling with many economic challenges, it should not be discounted as an investment destination. It's still a relatively large and sophisticated economy with a large domestic market. And in that sense, it still presents opportunities. So even though it's not a straight path to faster growth, I think there are opportunities for investors.
All right, so what are these opportunities you talk about? I mean, what are they so investors can actually know they are there, irrespective of the other things that are not working?
I think the opportunities on our stock market are there, and at the moment these are undervalued. So in that sense, foreign investors could get in at good prices. We also have a large domestic market. We have good mineral resources, and all the things that have made the South African economy what it is are still in place. But we're dealing with these problems of intermittent power supply and logistical challenges as well. So as we make progress with that, hopefully these opportunities become more profitable.
Well, we'll come to those challenges, but then still on what he talked about, or she talked about, if South Africa has strong institutions that can buttress its economy, the question then will be, what are these institutions and how well is the government harnessing the potential of these institutions to drive the needed growth?
I think the two best ones are the South African Revenue Service and the South African Reserve Bank. They are well known for doing the right things, even if it's hard. And in a sense, the government is harnessing both of these. The revenue services have really excelled at collecting revenue in very tough economic circumstances. And the Reserve Bank has kept the line trying to lower inflation in the face of tough economic conditions for many households and investors. And it's not easy doing the right thing, keeping interest rates higher for longer, but they've been able to do it. And I think it really gives confidence in macro stability and monetary policy.
Back to, the challenges you talked about earlier, South Africa has been hamstrung by almost, daily power cuts, which you talked about, crime and also free transport networks. Does it seem to you that these issues, or let's say challenges, are getting the needed attention?
There are a number of reports that indicate that there's progress being made on these fronts in different ways. I think there's a lot of less reliance on Eskom for electricity supply, as households and firms have been moving to their own generation, whether it's diesel generation or more renewable sources. The demand for Eskom's electricity is lower because people have moved to alternatives. In a similar fashion, ways are being found around those logistical challenges, and reports are difficult to quantify, but at least industry, I think, is optimistic that progress is being made.
About the power issue, let's look at the transport network now, the issue with, Transnet and all of that. How is that coming?
Slowly but surely. There are many plans in place, let's put it that way. And some of these plans are moving ahead, and there are continual discussions about how to involve the private sector in the public systems of Transnet. And even recently, Transnet have said that they are open to discussing the tariffs at which they would allow private access, which has been a sticking point up until now. So I think the progress is not fast, but it is happening. And what one reads in the local press is that industry bodies think that there is a process underway for improvement.
All right, so what do you make of PwC's Private Business Attractiveness Index? It suggests that despite the operational challenges, South Africa is becoming a more attractive location for private business compared to countries in Europe, the Middle East, and, even the African region. And then we saw it ranked 23rd out of 33 countries surveyed for the index in 2023. What do you make of this?
I think many things play a role in these indices, and I'm careful to interpret those as only improvements in the South African case. Often your ranking can change because your competitors worsened, or at least the perceptions of them. But these sort of policy plans and the implementation thereof has definitely lifted the mood a little bit. And I think industry players are saying we're seeing some slow progress, and that makes us optimistic for South Africa as an investment destination.
All right. I see you don't want to sort of say anything in particular. You're trying to be careful with that.
That's true. No, I don't want to dig into any details at the moment.
Okay, I'm going to take you on another one. Now, here is another statement. South Africa doesn't have that natural lever to pull that is suddenly going to shoot the light out from a growth perspective. And this is where the country does need to try a lot harder, having seen over a decade of growth underperformance. Do you share the same view? I mean, yes or no, and then tell us why.
Yes, no, that's true. I think those natural levers are few and far between, but there are economies who've been able to really reduce the cost of doing business significantly, or on the other hand, allow access to their markets, or increase their productivity significantly. As an already an economy with the characteristics of advanced economies, we are a relatively high-cost destination, so that's difficult to do. We're already a relatively open economy, so we can't get the benefits of opening again. I think we don't have we have a large population, but it's not a huge population that just provides a massive workforce or a significant domestic market. So the really fast growth that we're, for example, seeing in the case of India, those are characteristics that we would struggle to compete with, and that's why we need to do more of the basics right. In addition, I should say, we are far from world markets like many other African economies, which is also a constraint compared to emerging economies that are closer to the trade routes, etc.
All right, well, looking at this, we see that the gains of South Africa and those of Egypt and Nigeria are going to become more critical if the continent wants to reset the African growth story. So talk to us about the challenges Africa faces regarding growth and how well you think the various governments understand them and are tackling them. Because here we're saying that, I mean, these three economies are very important to kickstart growth in Africa. So what are your thoughts, basically?
I think we've been seeing some really optimistic and positive forecasts for growth in the broader sub-Saharan Africa this year and next year, and it's built on a number of things. It would include countries regaining access to capital markets so that their governments can finance their borrowing abroad, and it's also about access to resources. Many of the resources that African countries have in abundance are now also in demand for this green energy transition. So based on those, there's good impetus for growth. And the ways to get to that much faster growth are not going to be fast. It's about fiscal consolidation. It's about good macro policies. It's about lowering the cost of doing business, bringing foreign capital in to develop those resources. But this is the content of many of the policies that you already see across the continent. And I'm optimistic that the continent as a whole is going to grow much faster over the next couple of years than have been the case recently.
All right, so looking at economic gains of, South Africa, Nigeria, and Egypt, talk to us about how it will, impact the overall growth narrative of Africa. I mean, if these three countries take charge.
Absolutely. I think if these three countries are able to grow faster and do well economically, it influences policy making across the continent. And it also, even though intra-Africa trade is not that big, it does provide intra-Africa markets if these economies are growing faster and becoming bigger. And that is in itself, again, a source of growth going forward. So I think faster growth across the board, those big three and some of the others that have been mentioned by the IMF, for example, is going to be a key to lift the mood and change the narrative on Africa's growth.
So are there lessons, these countries can take from Ethiopia and Mozambique? Because, I mean, these were, former African economic powerhouses, but then what really went wrong? So what challenges led to their decline, and what are the lessons therein for these three countries?
I think that the key is stability. It's political stability, but it's also economic and policy stability. Those countries have suffered setbacks based on instability that scares off foreign investors, whether it's foreign capital or actual greenfields investment in your country. If a government is able to ensure policy certainty, it makes a big difference to investors' mindsets. We are basically asking these foreigners to put their money into our countries in 10 or 20-year horizons. And for that, they need to be sure they're going to get it back and make a good return. And if we can provide some certainty around that, good policies and consistent policies, that is really the key.
All right, back to South Africa now. When we were talking about the challenges, one thing kept coming up, and that is corruption and crime. How much of a problem, how much of a challenge is crime and corruption, in South Africa, and what really is being done to address this?
It is a challenge, mainly because it increases the cost of doing business. The corruption picture I would separate from crime, but normal businesses, regular businesses face high cost of doing business due to crime. And there are many initiatives in place, and I think that the police force have received additional funding. Justice has also received funding to expand their capacity. And there's good collaboration going on between big business leaders and the government departments involved in fighting crime and corruption. But progress is never going to be fast in this game. I think we are slowly but surely taking some steps, but it's going to take some time to really root out syndicates and corruption linked to business as well.
All right, so put together now, if we're going to address, the challenges or the issues with South Africa, I think it's important. Let me just start from saying that we have a situation where analysts are saying that, South Africa actually has what it takes for investors to come in. That's on the one hand. And then on the other hand, we also see that there are actually issues that we need to address. So where do we start from? Is it the messaging to attract investors? How do we do that? And then while we are doing that, what should we also be doing to address the main issues, really? Can we do both at the same time?
In our case, you know already that we're facing an election soon. So whatever happens is going to happen under a new government, and it's not quite clear whether the current government's going to have a clear majority and will be able to continue pursuing the policies that they already have in place, or whether they'll have to do it in coalition. This creates some uncertainty, and I think the political scene is going to be slightly more uncertain for a while. In terms of the policies that we need to pursue, we don't need new policies. There are many good plans on the table. What we need is faster execution and faster moves with these reforms. And in the process, some good messaging as well. There are still too many cases of ministers saying opposing things, talking conflicting policies. And I think if everybody can sing from the same sheet, that would make a major difference under whatever new government.
All right, so what sectors would you say are sectors that investors should look at? I mean, if we're talking about FDIs or even FPIs, because I think initially you talked about the equities market already, so that sort of addresses FPIs. But for FDI, what are the sectors you think, have the potential for growth that investors could, bet on?
The major one would be renewable energy. Irrespective of Eskom's current problems, we need to move away from coal-fired electricity generation and invest significantly in renewables. And I think that is a sector that is really ripe for even more investment that we're seeing at the moment. Trade and logistics as well, and there are many proposals about opening that up. And I think if those two are in place, then mining again becomes a really viable investment destination. And well, we still have a relatively rich, large domestic market that are buying consumer goods and services. So put that all together, and I think there's a lot of potential.
Absolutely. Thank you so much, Professor Krugel, for sharing your thoughts with me today on Business Edge.
You're welcome. Thank you.
Well, thank you so much for spending your time with me today on Business Edge, and that's the much we have for you today. Thank you for watching. I am Perpetua Fasami Pizza. Do enjoy the rest of today. Bye for now.